Hey traders, this is Christian from Tribeca Trade Group with your weekend review video on the markets. And it is Sunday, so this video is going to be a little bit shorter than usual because it is Mother's Day. Happy Mother's Day to all mothers out there. I have to run to a Mother's Day celebration in a little bit, so this video is going to be a little bit shorter than normal. So I want to talk about, kind of what's moving in the market, what's not moving in the market. And last week, as well as the last couple of weeks, there's been a lot of chop for the major U.S. indices. You could see last week the S&P was right about flat for the week, down 30 basis points. IWM was down a little bit more; it was down 1% for the week. And the Qs outperformed once again. They were up close to 1%. And then if we look over at international markets, you can see emerging markets had a really, really nice week. And bonds and gold were also flat for the week. So what I talked about this week, the main subject this week is while these major not moving averages, while these major markets, U.S. markets have been basically chopping around, it doesn't necessarily mean that there isn't things to trade. There's been a lot of single stock movers. That's basically how we've been trading in the Tribeca Trade Group. We've been really playing to the long side, some nice names, both China internet names, technology names, semi names, and consumer discretionary. That's where the strength has been. And that's where I want to be. That's where I want to be long. I want to be long, obviously, things that are moving to the upside, and I want to avoid sectors or areas of the markets that are breaking down, which we are seeing some sectors break down, there's no doubt. So I'm going to go over the sector review in just a second, but let's talk about the major indices first. And I have up here, we'll look at the daily chart first, and I've kind of taken out some of the moving averages just so that we can see this a little bit clearer. But S&P, there isn't really anything to kind of over analyze, I would say. The price action has dipped below the 5-period exponential moving average, but we're still above this blue line, which is a really nice trend line to follow. It's the 20-period exponential moving average, and as long as we're above that, I think we're pretty good. Secondarily, we're also above the May value area, so we're continuing to be in an uptrend. It isn't a huge momentum to the upside uptrend, but nevertheless, it's still moving up pretty nicely. Maybe watch for an MACD crossover, downward crossover next week. That would tell us that maybe the momentum is changing to the downside. But until that happens, until we break some resistance, I think you want to continue to be you know to be bullish, until something actually breaks. You can try to anticipate all you want to, and you can kind of say, oh well, we're not moving, and you still don't want to short a dull market, to borrow that phrase, but I think it's really applies to the situation. The S&P has been very dull the last couple weeks, but we're not seeing any sell signals at all. Could they happen next week? Sure, but I'm not going to guess. I'm going to wait to see that confirmation first, and if that happens, and same thing in multiple sectors that I'm looking at, then I can reduce some positions, but I don't see it happening right now. Is it getting close? Sure, but we don't see anything yet that basically is telling me to get out of this market. We'll go to small caps next because they were a bit weaker last week, and they're kind of sitting. This one's is a different picture. We're sitting right on the top of value. So we'll look at IWM because I know people look at IWM more than they do it than small cap futures. But basically, this level we're kind of sitting right on it, 137.39. So that will tell you, it's always good to look at small caps because sometimes they lead the market move and reveal some nice clues about the market. So right where we're at, if we happen to go a little bit lower, we're really going to enter into we're going to enter into the value area for the month, which means that we could have more chop ahead, and it's also getting out of that uptrend. So if it happens to get into value, I would probably say reduce your longs in small caps if you have positions there. I don't necessarily want to short it if it gets into the value area, but I just don't want to be long. Qs continue to be the outperformer. They're still overbought. I was kind of hoping that we'd get a little bit of a sell-off a couple days last week, or actually close close to the lows. But every day when we had a little bit of weakness, we came right back, and you could see that the RSI is still into way overbought territory on the Qs, 79. So would love to see us next week, kind of just burn off some of these overbought levels. It's not an area that I really want to add a lot of longs. If you're already long, great, but if you're looking to add longs, I personally don't want to do it when the Qs are in, I mean, a 79 RSI isn't even close to a 70. I mean, it's really pretty decently overbought here. So that's the case. Notice we did this before and we stayed overbought for a while. Still, again, if you're in it, I would stay in it, but I don't really want to add many new longs into the space. So we just went through the major indices. I want to look at where we're going to open up for the week, considering it's Sunday and we've got a whole new week of value areas. It looks like this is going to be next week's value area. It looks like Qs we're going to probably start right around the top of value. S&P, like I mentioned, is everyone is a different picture here. It looks like we're going to start the week in value like we did 2 weeks ago. So we'll just have to see. And we've got some defined support, defined resistance. 239.78 looks like it's going to be resistance. 238.95. Again, these weekly value areas or on the 1 hour bar really are good to note support and resistance levels. If you remember 2 weeks, all we did was basically bounce around like a pinball until Friday. And then for the most part, last week we were above value, fell into value, found support at the bottom, and then kind of hung out back above value for the whole week, right where we started. So really 238.95 will give us a clue to the downside, or if we could break out 239.78. If we can, it could be another choppy week on our hands for the major averages. All right, so that is the index review. Let's move over to sectors. So every week I break apart what the market breadth is. If we're getting stronger, if we're getting weaker, what areas of the market are avoids, and what areas would you rather be long in? So from last week, there's not a whole lot of changes. You see another sector, some of these sectors kind of flip-flop every week. We continue to see, one thing that stands out to me is financials. They just can't seem to really get they can't make that next leg higher, and they're not breaking down either. So I view them as a neutral. I don't really want to be in any banks right now unless there's an opportunity to kind of buy them on a dip after a sell-off, but they just don't seem like, and I know they spend a lot of time on financial media talking about the banks over and over and over. They're just moving sideways. Now, I don't know if this is going to be a head and shoulders pattern, a little too soon to be, but it doesn't look like there's a lot of momentum to the upside at all. So why be something and that doesn't have any momentum to it? I don't know. I'm not I have exposure, I think, to one name in the space that we saw some call activity in last week. But other than that, no reason, I think, to be in this group whatsoever. It just looks like chop to me. Here's a 200-day moving average. It's also below the 50-day moving average. Sorry, I forgot to bring that in here. So, maybe if it retakes, and I've talked about this, if it retakes the 50-day moving average, something to look at to the long side. But notice it's gotten rejected. The price seems to be following that 50-day moving average, which is the purple line on my chart. So nothing really to see there. And then, the sectors that have been strong are that I have more positions in, especially in the semi group, is XLK, which remains strong. Consumer discretionary, which dipped a little bit towards the end of last week because there are some retail companies in here. So these are more the areas, the Chinese internets, which I'm going to go over in a minute. This is where the momentum has been in this market. So I want to be in those areas that are trending up and that are moving quickly to the upside. And those are the areas that I really see that taking place. If we go back to the newsletter, you could see also some of these sectors have a little bit of the momentum is falling. I don't think that should really surprise anybody in terms of the last couple of weeks with the overall market's moving sideways. Sure, I think they've lost a little bit of momentum. One area that I'm watching as well, which is not, these are the major S&P sectors. These are the GICs, the industry classification of the biggest sectors in the S&P. I also look at subsectors as well. But so if you look, before I go into the subgroups and subsectors, you can see we've got 3 sectors now that are below the 200-day moving average. This is a little bit different than in the last couple months where I've been said, hey, I've basically positioned all to the long side because everything was kind of moving up. We definitely don't see that anymore, especially the last couple of weeks. There are some sectors that are breaking down and moving to the downside, as energy is. Energy, another place I don't want to be in at all in terms of longs, especially. I'm going to talk a little bit about MLPs in a minute, but in terms of the major big energy companies, no way, not for me. They're below the 200-day moving average. No reason to try to say to take a shot on any of these. And the other thing that we do at Tribeca Trade Group is we watch the tape. We're looking to see where aggressive call activity is. And so I mentioned financials and they're below the 50-day moving average. What would change my mind is if we start to see a lot of big buyers come in some individual names, something that we really haven't seen the last 2 weeks or so. Healthcare, I think, is interesting here. So I'm not going to go through every sector. We are giving a webinar on Wednesday night, which we're going to go through every sector and kind of break them down and talk about what's best, what's worst, and what's kind of just choppy. So that review is going to be on Wednesday. But a couple sectors that I'm looking at is biotech. Biotech failed to break out last week. There was a report out by Bank of America last week talking about how they're very cheap versus how they've been historically. Notice they found a nice turn here in the market. It does seem like whenever there's a little bit of volatility in the market, biotech seems to lead the way down, which we saw that last week. A couple big days of some declines, but notice where we found support are now reclaimed. So you've got some nice support here. You got the 50-day moving average. You also have the top of value, which is 69.04. So that's the levels that you want to watch in biotech. I also didn't mention, didn't bring up a chart of semis, but last week NVIDIA reported they had a blowout number and helped lift the group higher. But this has been very strong now for months. What a great buying opportunity this was in here that we talked about a couple different times. Great buying opportunity here to kind of add some longs in the space, and since then it hasn't really turned back. I think I already mentioned KWEB, which is the Chinese Internet ETF, just one after another in terms of call activity. Note we do get BABA earnings next week. The trend has been all earnings season that names have been, especially strong names, have been running into the report. And then the report ends up being kind of a fizzle or a non-event. So I think that's what's happening as well with Alibaba, which reports, I think, on Thursday, either Wednesday or Thursday. Alibaba reports, it's overbought here, and I don't see any reason to really put on a trade. We've been long Alibaba in the trading room for the last couple of weeks. I took that position off on Friday, and actually, the options expired on Friday, but it's already made that move into earnings, so I see no reason to really be long Alibaba for an earnings trade, considering it's overbought, and we've seen similar examples. Facebook is a great example. Huge run into earnings, and then it fizzled after the earnings report because it got bought so well into earnings. Not to say that it's not going to pick. I think it's going to make that turn and pick back up further to the upside in Facebook, and that's a name that I structured a trade on Friday to go long Facebook. It's had enough time after earnings to kind of digest. No longer look at, you can see on the RSI it's no longer overbought, but you could see how overbought it got into earnings. Same thing with Apple. Apple took about a few days, really didn't rest that much. Basically, just about 3 days, where it rested after earnings and then took off last week. So that's kind of been the pattern of a lot of strong names, and that's how we've been positioned, and that's how we've been making money in the trading room. Is we've been playing the move into earnings and then taking the position off on the earnings report as the name has gotten overbought. So we've done that with about 5 or 6 different names this last quarter. So really nice moves. I did that with Ulta Beauty, which they have not reported yet, but I made some nice money on that one. Home Depot's kind of been doing the same thing. Broadcom, AVGO, have a small position left in that one. I've been taking off profits for greater than a double in terms of profits. So that has certainly been the case with most companies. All right, so Just to kind of wrap up the review in terms of sectors, watch, considering some of these have a little bit of falling momentum, there's really nothing to kind of say, hey, I'm going to get out of these positions until they break the 50-day moving average. Considering that most of these sectors are above the 50-day moving average, that's where you would want to say, hey, I'll take some profits once we break and reduce some positions, reduce the 50-day moving average. But anticipating is not a game that I really want to play. I'd rather wait for that confirmation. Less performing sectors, and then really the theme of what I'm surprised I haven't talked about that yet is what we're seeing in this market, and especially with ETFs, which really give a good indication of what's going on in the marketplace, is that money, and again backs up the choppy markets. The money has not been flowing into domestic ETFs in the last couple weeks. We had 1 week right after the first round of the French election. But besides that, all the money, all the new money has been going into international ETFs. They've been going into developed market, so both Europe and Japan, and they've been going into emerging markets. So here's a breakdown of where they've been going. You could see for the week, international ETFs posted $5.6 billion inflows, very similar to what they posted the week before, which was 5.4. So the last 2 weeks, it's been $10 billion that have gone into international ETFs. That's really where the new money is being put to work. It's not going into U.S. ETFs. The money in U.S. or domestic ETFs is being rotated around between sector to sector. The big major index ETFs, SPY, IWM, Qs, they are not seeing money being added every week. So I think last week, I'm not sure if that's, yeah, IWM lost $790 million, SPY lost 633. And then if you look over at the largest flows by ETF, it's EFA, IEMG, IEFA, there's a bond ETF in here as well, but VEA, which is also international developed. So I can't, I can't make it easier an easier picture for this of where the money is going into. And if you're in a trading room and you're not, and you're the whoever's running the room, if they're not talking about the flows going into international instead of going into U.S., I think you're really missing out. You're really missing the boat in terms of what's happening in this market year to date. So U.S. markets are doing fine. They're up. I think the S&P is up about 7%. But if you look at what some of these international areas are doing, that is where the alpha is. That's where you're seeing outsized gains, and that's what we've been focused on. I'm focused on both the performing areas the areas that are doing well in the U.S., but really these international areas are doing just phenomenal right now, and that's where I want to be. That's where the money is flowing into, and where the buyers are is really where I want to be in the marketplace. So that continues to be the trend, and fixed income. I've seen a couple notes out there which I disagree with. The money is not going out of equities and going into fixed income. It's going out of, again, U.S. equities and into international equities. So if somebody tries to tell you that the money is going into bonds and trying to scare people, that's not really what's happening. There is a little bit. Last week there was $2.3 billion of inflows into fixed income, but it's a lot of, it's not one particular area. It's not going all into treasuries. It's going into corporate bonds. It's going into international corporate bonds. And a little bit into treasuries as well. So the $2.3 billion just really wasn't going into all treasuries. There's a couple listed there, but definitely not the whole trend. And then oil actually saw a little bit of dip buying last week, $220 million inflows. Same thing with silver, which was down for a long time. So I just wanted to talk about a couple flows from last week. AMLP mentioned, energy is not really a place that I want to be. MLPs are a little bit different. They are above the 200-day moving average. There's a nice $1.1 million option premium trade from last week. Just right at the last 10 minutes of Friday, there's 37,000 total of the January 18 strike 13 calls that went up, which is about 1 million in option premium. So what are MLPs? You've probably heard of some of these names before: EPD, ETP, EEP. Those are the major names that are in this ETF. Other sectors to watch, Jeff Gundlach received a lot of attention about his long emerging markets relative value trade versus S&P. This is something that again we've been talking about now for months, and have been positioned more that way in terms of emerging markets, which have just been really nicely outperforming over the last week. So sorry, excuse me, year to date. Year to date, EM is up 17.7% and SPY is up 7.7. So, get back to what I was talking about in the flow section. You're looking at 10% outperformance. So, is that trade over with? No. Why I have a 10-year chart here is below, showing how much emerging markets have really underperformed the S&P as well, for over the last 10 years. So this trend may just be starting. You can see the price action has gotten above this downward trend line. So I very much like that trade. I will be structuring that this week in the Tribeca Trade Group room. So if you're not a member and you want to see how we're going to structure a pair trade using options, now's a really good time to sign up. So TribecaTradeGroup.com is where you can go and you can sign up. We're going to be looking at this trade. I've got also a number of other trade ideas that I'm looking at as well. Just to kind of, we already talked about Chinese internets. They were the best performing group last week, up 5.5%. We talked about Alibaba already. And then again, kind of same thing that I've been preaching here. This is IFA, which is International Developed Markets, basically about 50% Europe, about 40%, 35% Japan, and another 10-15% of other countries, international developed countries. But biggest inflow of the week last week, $1.1 billion and $2.7 billion being added to this whole group. Again, that's where the money is gravitating towards. So I think that just got over the 2014-2015 high, and that's now going to act as support. So that would be the area that I would trade against for support. Also you could see that this is also an area that is probably best if you're not in it to maybe have a starter position, because you could see how far the price action is above the 50-day moving average. I really like to add positions once they pull back a little bit. So I think right now, if you're not in it, what I would personally do is maybe have a starter position, and then really put a bigger position on a dip, which we usually do get those dips. We just haven't seen one in a while in this group. So that's it. There's also a review that we do in terms of all the best option signals from last week. There was certainly just a huge amount. So even though I mentioned in the beginning of this video that there's been pretty choppy market, we are seeing a lot of activity in single name options. So I'm going to do a separate review for that. Again, you have to be a member of Tribeca Trade Group for that review. So go ahead and sign up, TribecaTradeGroup.com. Have a great Mother's Day, everybody, and we'll be putting a few more charts on Twitter later today once I get back from the Mother's Day celebration. So again, everybody have a great weekend and enjoy it.